To all my listeners, whether you're a gold bug or you're concerned about inflation and protecting your capital, you need to check out my brand new conversation with Dan Ferris on the Stansberry Investor Hour podcast out now. You can easily access the episode by clicking the link in this video description box. Hope to see you there. Hi, this is Daniela Cambone, and welcome back to Stansberry Research. Well, Charlie Munger, the right-hand man of Warren Buffett, came out recently with some pretty strong statements in regards to the inflationary environment here in the US, saying that inflation is a very serious subject, so serious, in fact, it's the way that many democracies die. Can't wait to get my guest thoughts on these comments and more. Please welcome back to the show, Rick Rule of Rule Investment Media. Rick, always nice to see you.
Daniela, a particular pleasure to be interviewed by you, particularly because you take the time to do the research about the people that you interview. It's a real pleasure to field questions from you, however tough they may be.
Well, thank you. Thank you. I think we're going to have some really good conversation here. I saw we were on the same wavelength because I thoroughly enjoyed the recent comments from Charlie Munger, and I saw that you were also commenting about them. So I thought, what a great way to start this conversation, though we have a lot of other topics to cover. But first, he came out saying that inflation is a very serious subject. You could argue it's the way democracies die. It's a huge danger, citing hyperinflation as a cause of the collapse of the Roman Empire. He went on to say it's the biggest long-range danger we have, probably apart from nuclear war, said the 98-year-old Munger, who's still sharp as a tack. Do you agree with these statements? How dangerous is the inflationary environment?
I do agree with the statement. And I think it's useful that the statement came from Charlie Munger. It didn't come from a libertarian or an anarcho-capitalist. It came from a political pragmatist who has made his fortune making larger fortunes for other people. So I think in this instance, it's important to remember the credibility and the bias of the person who made the statement. That isn't always the case, but in this case, I think it's really germane to the statement. What Munger says in the interview explicitly is that inflation is a consequence of the politicization of society. The fact that disputes are settled by government, the fact that commercial exchange is arranged by government, the fact that democracies become clientelist. What happens in a clientelist, government-centric environment is that payment, well, let me put it differently, benefits and programs are very popular, but paying for those programs is very unpopular. What societies inevitably do is vote themselves benefits, but leave the cost to the next generation, the unborn, or the politically powerless. When Charlie Munger talked about the fact that the electorate gets what they want, mostly good and hard, he was referring to Weimar Germany, where the outcome of socialism, the outcome of unfunded benefits, the outcome of solving disputes politically, rather than allowing the messy markets to solve them. The outcome of that was Adolf Hitler. The fact that Munger was willing to say that the outcome of excessive government in Weimar Germany, the outcome of the distribution of wealth by fiat rather than by utility was Hitler, was an extremely powerful statement.
I thought so. I agree, thoroughly agree. And, of course, there were other powerful statements. He was also asked his thoughts on rating the Fed, in essence, of how they're combating the issue. And he said that, too much money has been thrown at the problem. He says he doesn't criticize the Fed, saying it's a hard decision to make. And, they kind of had to react quickly. But that too much money has been thrown at the system, at the problem.
The truth is that over 35% of every currency unit, which is to say dollar, in the United States has been created in the last 2.5 years. That's quantitative easing. It is not like they printed currency to accommodate an expanding economy. It's not like the economy has grown by 35%. Society's political goals couldn't occur without debasing the currency. In other words, we're spending our children's future. That's what inflation is always about. Negative interest rates, if you think about it, negative real interest rates are a function of you saving and foregoing consumption, lending your money to me so that I can consume now, trusting me to pay you back and accepting the fact that I pay you back less than you paid me. Munger didn't say it in those terms, but what inflation really is about right now is negative real interest rates, debt and deficits, and quantitative easing. And there seems to be widespread acceptance among the voters and among the political class to have their cake and eat it too, which is to say, vote themselves all kinds of benefits, solve disputes politically in Congress, solve distribution politically in Congress, and not pay for it.
Just one more quote from Munger I want to share with you. He says, I think the safe assumption for an investor in this current environment is that over the next 100 years, the currency is going to zero. That is my working hypothesis. And had I been the journalist conducting that, I probably would have probed him more on that comment, which I thought was quite interesting. Now we know and have talked about all currencies end up going to zero, but I want to know what comes after that.
Well, let's look what came before it first, Daniela. You are a working journalist. If you look at the last 100 years, we didn't quite achieve Mr. Munger's goals. The purchasing power of the currency has only declined by 98%. But the fact that the purchasing power of the currency over 100 years, the last 100 years, fell by 98%, causes one to wonder. Let's say, just for fun, that Mr. Munger is apocalyptic and is wrong. Let's say that the purchasing power of the currency only falls by 98% again. It is not a happy circumstance. It is not a happy circumstance. And let's look at the rate of increase of the problem. Let's look at the fact that the last time we had an inflationary difficulty in the United States in the 1970s, that government debt to GDP was around 25%. Now government debt to GDP is around 100%. 120%, pardon me. The tools available to combat inflation at the same time that government fulfills its historic roles becomes tougher and tougher and tougher because we've spent our future over the last 40 years.
And I guess beyond Munger, St. Louis Federal Reserve President James Bullard cautioned, along the same wavelengths, that without action on interest rates, inflation could become an even more serious problem. Quote, he says, we're at more risk now than we've been in a generation, and this could get out of control. And he has called for a full percentage point in rate hikes by July. My question to you is it enough? Is anything they do at this point enough?
Well, they could stop spending. Government is a source of major demand, so they could stop spending, which would, I think, halt inflation in its tracks. They won't, but they could. Would 100 basis points be enough to halt inflation? Of course not. At present, the consumer price index, depending on how you figure it, is between 6.5% and 7% escalating, which is to say the purchasing power of the currency is declining by 6.5% or 7% a year, while the interest rate paid on the world's benchmark security, the US 10-year Treasury, is at 2%. That 4.5% negative yield is what forces people to combat inflation. Inflation, from the average person's point of view, is simply the deterioration of the purchasing power of their savings and investment assets. Think about the fact, Daniela, that don't focus for a second on the US 10-year Treasury, although I led with it. Focus on the fact that the junk bond index, that is credit compromised public bonds, now yields 4.7% in an environment where the purchasing power of the currency is declining between 6.5% and 7.5%. In other words, people are guaranteed a loss before credit quality by buying junk bonds. If that isn't inflationary, what could possibly be? You have an incentive to spend, not to save. That's the nature of inflation.
I always like making things relatable. So I want to know if the current scenario keeps you up at night, Rick. Are you losing sleep over this environment?
I wouldn't say losing sleep. It's certainly a concern. It's
Right.
certainly part of what I try to do with Rural US Media. I talk to 68,000 people fairly frequently about the fact that you're going to have to change your investing habits. If you have conditioned yourself over the last 40 years to be a bond investor, because interest rates fall, so the capitalized values of distributions increase, you're going to have to change how you invest. The idea that you're getting a 2% safe yield in a currency that's depreciating in value by 6.5% means that over the course of 5 years in a so-called safe savings instrument, you will have lost a third of your purchasing power. For myself, Daniela, that's less of an issue. I took control of my own finances in the 1980s. So at least at age 69, for the rest of my life and my wife's life, I'm fairly secure. I feel real concern for 68,000 people in my database who have begun to listen to me about how they might conduct their own affairs in the context of the economic circumstance that we face now. I feel real concern for them.
And I would think growth stocks are a huge risk here. No, Rick?
I think that depends. I think the valuations in growth stocks might be excessive. And I think part of the excessive nature of that has to do with the speculative impulse that we get from easy money. I am one of those who believe that we'll get through this somehow, Daniela. I have no earthly idea how. And I think that the best companies in the United States will be a lot more valuable 20 years from now than they will be now. I suspect that the next 5 years might be very interesting. We've gone a very long time without an equity markets reset or a debt markets reset. I'm frankly, if somebody has a 10-year horizon, much more concerned about the bondholder than I am about the equity holder in the best businesses in the country.
And on that point, and as a segue here, you've talked about the importance of owning cash, of being liquid, of being able to be nimble and to scoop things up when there's a good deal happening. Let's look at what's happening in Canada, which is a country you and I share, a lot of time in, with the current freezing of accounts of funds of those who supported the trucker freedom protest, call it whatever you want. Not looking to get political here, but thinking, does this build a bigger case for assets like gold, like silver, like Bitcoin, a bigger case to perhaps get off of the grid, off of the system?
Off of the system may not be possible for most people, but partially out of the system makes absolute sense. Were I a Canadian, I absolutely would open a bank account outside of Canada. The government of Canada has decided that they can freeze the fiscal assets of their ideological opponents without due process, without resort to the court. This is fascism writ large. And this isn't political. I'm not saying it's aimed at the liberals. The idea that the government of Canada believes that they can confiscate the financial assets of their ideological opponents without recourse to due process is absolutely chilling. One of the reasons that I emigrated to Canada in 1970 was the drift to fascism, ironically, that I saw in the United States with the selective service in the war in Vietnam. Canadians have always been a little envious of Americans, and it would seem now that the Canadians are way ahead of Americans in the race to the bottom. This idea that it is okay by fiat, without vote and without recourse to the legal system, to confiscate the financial assets of your ideological opponents is pure fascism. It's disgusting, irrespective of how you feel about the Freedom Convoy.
Right. And I spoke to some friends who obviously work at precious metals dealers, and I can't tell you the number of calls that have been coming in because of this news item, and for the exact reason that people are looking for different assets, or like you said, getting some geographical diversification. So it has been a catalyst perhaps for people to think outside the current system that they're in.
The hubris of the political class in Canada and the docile nature by which most Canadian voters seem to have accepted this is mind-boggling for me. And it reinforces to me the necessity to take control of your own financial future and don't trust the commune. don't trust society, don't trust the Commonwealth. Use them to the extent that you have to, but don't believe, particularly somebody your age, that a government sponsored pension or government guaranteed pension is going to be there, or at least don't believe that the purchasing power of the so-called obligation that they have is going to maintain your standard of living. Maintain your own standard of living. Do not trust. You know, Daniela, when I was a youngster, admittedly a long time ago, I heard a little ditty that all of your listeners should listen to, and they should forward to their members of parliament and their congressmen and their senators and all that. It goes like this: when your outgo exceeds your income, your upkeep becomes your downfall. Munger would say there's no free lunch, but what he is saying is that as a society, if you spend more than you earn, if you redistribute to those who didn't earn from those who did earn, it has an unhappy ending. Munger would point to Weimar Germany, the outcome of which is Hitler. I would suggest that a strong first step on that road was taken by the Prime Minister in Canada. And I'm not an alarmist. You know, I consider myself to be a hot-eyed moderate, sort of like Munger.
Yeah. Definitely food for thought there, Rick. Just sticking to sectors that Rick Rule likes right now. I know top of mind for you is the uranium sector. You took a lot of heat for it in the past, but you never wavered from uranium. In fact, you'll be hosting a uranium boot camp, and we'll throw up the link in the description for those interested, occurring on March 19th. You almost rounded up all the stars of this sector. Why so bullish on uranium today?
Well, you'll recall 3 years ago, you and I talked at length about uranium. And the
Yes.
fact that despite the fact that it wasn't popular, it was necessary because folks want the lights to go on. Even in a rich country like the United States, 14% of electricity supply is uranium and 20% of baseload supply is uranium. But uranium is and has been for a long time priced below the cost of production, which means fairly simply that either the price goes up or the lights go out. Those are the two alternatives. I know the lights aren't going to go out, or at least I hope the lights aren't going to go out, which means the price has to go up. That's been true for a long time. And the question became when. The difficulty in uranium was an oversupply of uranium post the disaster at Fukushima and post the production surge we saw from the last bull markets. So we had to work our way through that overhang. And one of the ways to do that was to wait until the Japanese nation, the second largest uranium consumer in the world, began to generate nuclear power again. Two things have happened, Daniela. The first was the incredibly successful introduction by my former firm, Sprott, of the Sprott Physical Uranium Trust, which raised 1.2 billion fresh dollars in 4 months, and by itself tightened up the spot market in uranium. But the second, more important catalyst has been the realization among the Japanese electorate that they can't maintain their carbon protocol pledges, and in fact, they can't maintain their economic growth without incurring too much particulate pollution without nuclear power. So the Japanese have restarted, I think, 11 plants, and they have 18 more plants in for permitting, which is the catalyst that moves the uranium market. Meanwhile, the uranium equities market began to get ahead of itself a year ago. You'll recall another discussion we had where I said I love the uranium thesis, but the stocks are too expensive. Well, in the last 7 months, the index, the equity index, has fallen by 50%. At the same time that the timeline for the resumption of the uranium bull market has become much closer. So we have this wonderful circumstance where the catalyst for higher prices is at hand, but the cover charge, if you will, to participate has fallen by half. The consequence of that is that I've graded 8,000 portfolios that are primarily oriented towards uranium, studied the portfolios fairly closely, and I've come to understand the mistakes that most uranium investors and speculators make. And myself and my team have, as you suggested, we're going to host on March 19th, Uranium Investors Boot Camp.
Want to also get your thoughts on what we're seeing with the gold miners right now. You know, as we're speaking, as this interview is being taped, gold is up 15%. Obviously, inflation a trigger for higher gold prices, but gold miners, many of them are saying, gold mining executives per se are saying they're not benefiting yet from the rally here.
Well, I think all that's true, Daniela. Very seldom in my career has the gold price increased at the same time that the US dollar is increasing versus other currencies, at the same time that nominal interest rates are going up. When you have those three things in common, you are usually setting the stage for a ferocious gold rally. It's said that gold goes up by elevator and down by escalator. When gold goes up, it really, really, really goes up. And in my career, what has tempered the increase in gold prices has been at least nominal interest rates. Interest rates are going up and gold is going up. And faith in the US dollar. Gold and the US dollar are rising simultaneously, which historically has been very bullish for gold. And as you have suggested, the denominator, the gold price has been going up, but the prices of the gold equities have not been going up as rapidly. The idea that you were making, let's say, $400 an ounce at $1,700, and you'll be making, $550 an ounce at a slightly higher price means that your earnings will increase more rapidly than the gold price if you manage your business correctly. At the same time that's occurring, many of the gold equities, if you value them the way I value them, which is the net present value of their cash flows at current gold prices from attributable, developable resources and reserves relative to their enterprise value, which is their market cap and their debt combined. These companies are as cheap relative to the gold price as they have ever been in my entire career. Mm-hmm. So we have this interesting circumstance with me where the gold price seems to have found a stimulus, where wind is in the sails of precious metals and the equities are reasonably cheap. It would seem to be, absent a real general liquidity squeeze in markets, the perfect storm for gold stocks.
Would like to wrap now, Rick. We started with Charlie Munger, and I would like to wrap with his thoughts on cryptocurrency, specifically Bitcoin, which he has compared to a disease. He said he would love to see it banned in the US the same way China did. But, taking it one step further, he was commenting on the idea of a central bank digital currency. And he says, quote, the Fed could have a currency if they want one. We've got a digital currency already. It's called a bank account. The banks are all integrated with the Federal Reserve System. Just thoughts on the idea of a Fed dollar, Fed coin, call it whatever you want. How far away are we from that reality? And do you agree that, if the Fed wanted one, they could snap their fingers and it'd be here tomorrow?
Well, let's go back to Munger saying it. That's maybe the dumbest statement that he's ever made. Justin Trudeau has just given us one reason why you don't want a digital Fed currency. If you can imagine a combination of the Chinese system of digital social scoring and a currency where the government could cancel the currency, never mind seize your bank account, but simply cancel the currency that you owned, that's maybe the most chilling social circumstance, other than nuclear war, that I can personally imagine. The idea that the government would have control of your means of expression, your means of communication, your means of generating and storing utility, and could use it to serve their political and ideological ends, is as terrifying an idea as has ever been presented to me. That is literally the sort of circumstance that would cause me to store ammunition as opposed to gold.
I want to ask you, should that reality come to fruition one day, Rick, do you think that or do you hope that that there'd be pushback from the general population, that they'd say, no, we don't want this? Would they understand those risks that you just perfectly outlined? Or do you think it would just be accepted, like, okay, we're going digital now with this currency, and they'll create a narrative that people will just accept?
I don't know the answer to that, Daniela. I know that every time in my life I've become really apocalyptic. Every time I've looked at the social circumstance and said, how can society survive this? Society survives it. I hope, if the problem is created by technology, which is to say technology enabling the governments to do this, that technology will develop various ways for individuals to save themselves from collective stupidity. That's my hope. I cling to the optimism that our individual creativity and our individual tenacity is lucrative enough that we can afford our collective stupidity. I said before, Daniela, that the thing that always gives me hope is the fact that even in a society as stilted as our own, 6 youngsters, pimply-faced kids, can take over a garage in Sunnyvale, and out pops Google. And if you want to look at the positive side of this, and I'm not being politically correct, increasingly, some of those 6 people will be named Daniela as opposed to Mark. And that garage may be in Lagos. It may be in Jakarta. It doesn't have to be in Sunnyvale anymore. And it may be that the individual solutions for collective stupidity come from voices that we haven't listened to before, not old, fat, bald Austrian males, but rather the greater part of society that has been misled by the collective for a long time. That's my hope, at least.
Rick, one last thing before I let you go, if you don't mind me sharing, because you are in retirement. You celebrate the fact you're in retirement, but you are supporting the return of perhaps one of your first and largest projects ever, the return of EverBank.
Yep.
Tell us a little bit about this and why.
Well, further to self-determination, I do a lot of business with banks where somebody who specializes in bank balance sheets and income statements, can't understand them. So I've deposited money in financial institutions I can't understand. And I reached out to 500 of my closest friends, people who submitted their natural resource stocks to me for rankings, and asked them how comfortable they were with their current banking relationships. 500 out of 500 said not comfortable at all. I'm an entrepreneur. That's a market. When banks make 5 to 7 year fixed rate loans and they finance those with cheap overnight variable rate deposits, that mismatch, that time mismatch and risk mismatch is precisely what gave us the liquidity squeeze in 2008. I don't want to be part of that circumstance. Technology gave us the ability in 1998 to back a group of guys that started an online bank called EverBank, and they grew it from nothing to $28 billion simply by creating deposits that were different than those created by the banking system and providing good customer service. After 15 years, first of all, that bank went public on the New York Stock Exchange, and it was sold to TIAA-CREF, a big pension company. The pension company needed the bank as a platform for 1.5 million members. The marketing apparatus and the special product apparatus that, from my point of view, made EverBank special wasn't something that TIAA-CREF needed. And although they've been extremely successful operating the bank, the original customer base that EverBank serviced isn't being serviced as well by TIAA-CREF. And so I'm backing the team that created EverBank to start a new bank called Battle Bank. You can understand the name. We did and will again battle for our customers. We will create deposit products that are geared to today's market.
Wow. Well, I'm excited. Well, thank you for sharing that scoop with us and the news. And I'm excited for you. And I wish you always a lot of success.
Well, what retirement looks like for me, Daniela, is I'm doing only things I really enjoy, and I'm not doing anything at all that gives me aggravation.
I know.
Except for wrestling with my computer so that I can talk to you.
Well, I appreciate you making the effort to speak with me today. It's always a pleasure. It was an excellent talk as always. Congrats on all your success, and come back soon, okay?
A pleasure. Thank you very much for having me on. And thank you particularly for preparing yourself for the interview. It's a delight to be asked intelligent questions by a prepared interviewer.
It's my job, and I love it, and thoroughly enjoy speaking with the great minds like yourself, Rick. Thank you again, and thank you all for watching. We'll have much more for you on Stansberry Research, and do not forget to sign up for premier content you can't get anywhere else at DanielaCambone.com. That's it for me. Thanks for watching.
opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.